This is at the bottom of each of our website pages, and pretty important particularly if you're new to the markets and so on. So a lot has happened already today, and the primary thing that happened today was the market opened up higher and through I don't have the chart up yet, but I'll show it to you. We were forecasting that the S&P was going to move down from this morning's high, and in the third hour would be down at 42.33. That was the main forecast, and Jerry was forecasting that the market would get down to 23 to 22 after it reached 33. So here's the first hour, second, and third hour. We made the call right near the open, and the market did come down to 42.37 in the third, and then in the fourth hour, it did complete the 33. So it came 1 hour late, and actually, you know what? This is the March contract. It actually came on time because we have to go into the June contract. So sorry about that. We have rolled, of course, I'm sure you have as well. So anyway, so this is the third hour, and the low in the third hour was 42.2775. So it came in on time, the 33, and it did end up doing the 42.23 level. So now they're bouncing off of that pretty nicely, kind of crisp behavior. And then if you can visualize this is the day. Now, you may have been taught, unfortunately, that if the market has a day like this, that would mean that it's a top and it's moving lower, and sometimes it will. But there's many, many more things at work in the market that simply can't be forecast from this one piece of information that candlesticks might be asking you to derive from. This one piece of information, whatever this day ends up being in candlesticks, doesn't speak for the whole market. So it can't speak for the whole market. So therefore, you have to look beyond just simply what happened today in order to have a really good and better and more accurate idea of what is going to happen tomorrow or later today or any number of things like that. The candlestick, the idea of using a daily bar or an hourly bar to understand what the market's going to do comes from that particular body of work, which is candlestick charting. But the reality for the market is that you have to know more, because candlestick charting doesn't refer to the rest of the market. It only refers to the way the bar printed today. And there are some candlestick patterns that involve 2 or 3 bars, which is a little more comprehensive, but it still very much falls under the category of sort of like pattern recognition and so on. So you really could say the positive side of candlesticks is that if you did have a good idea that the market really was wanting to go lower and you would work that out, then seeing a bar like this could be helpful to your premise that the market is not doing so well and going lower. But to just look at a single bar like this and say, in candlesticks, this is a hanging man, so we're going lower, is not a road to happy success. Again, not because I say so, but precisely because no single bar speaks for the entire market. It's exactly for that reason that you have to be very careful in using it, because on its own, candlesticks is pretty much a coin toss, whether it's going to do what the pattern says it's going to do or not. The real thing, the real business, is in understanding the total condition of the market at a given point in time. And so this morning, when we came in, the total condition of the market indicated a decline into the third hour down to 42.33, which was pretty substantial because the high today was 42.81. It was a sizable 50-point decline due into the third hour. Now, we didn't get that information from any single price bar, right? We're not looking at a single thing and saying this one thing speaks for the entire market, and whatever this thing says the market's going to do, that's what the market's going to do. It doesn't work that way. And you can see, if you think about it, it really doesn't make any sense to think of it that way. What the market does on a single price bar can be useful information if you've worked out what is likely going to happen and what the real condition of the market is at that time, as opposed to just saying, here's one price bar that speaks for everything. So keep that in mind when you're trying to do work that involves markets and so on. And I think there's a beautiful history to candlesticks. I actually love the way they look. I mean, I would never go back to this crap. I mean, to be blunt, this to me is much, much more difficult to see and understand. Even though there are people who use this and they do see and understand it, would be really hard for me to be able to use bars like this. So I really honestly adore candlesticks. I mean, they make my life much, much easier. I can see and understand what the market has done much, much better. And I'm sure you can too, by seeing them in this format. And again, there is a kind of a beauty and a kind of a, there's a little something maybe mystical, maybe about maybe more romantic than mystical, but just the fact that they've been around apparently for thousands of years. And, when people would draft what a market did on a piece of paper in the rice markets back, 1,000 years ago, it would, they would record this information on a piece of paper, and candlesticks got born in some way. And all that's really beautiful. And it all has a really nice feeling to it. And so I love everything about candlesticks, except the premise that any one price bar speaks for the entire market, which it doesn't. It simply does not. So if you're going to use them in accordance to or in conjunction with some wider, deeper understanding of the condition of the market, rather than just saying, well, this bar did this and therefore it means that this is going to happen, because it really doesn't speak for the entire market. The entire market speaks for what the market's going to do next. That's how it actually works, not a single price bar and so on. So anyway, it's very interesting. Now we do have, and I don't have as much time today as I normally would, but I do want to talk a little bit about upcoming Tuesday and Wednesday, where the Fed is going to be changing the interest rates and stuff. That's going to make, when it actually happens, it's going to make the volatility nearly volcanic. Not saying that the market's necessarily going to go up, although we do have certain conditions that we would be looking for up. But having put that aside, there's going to be really, really big volatility next week. So I'm super excited about that. I hope you can be here next week for that. And I do want to say that when the volatility is very large, you can lose an enormous amount of money in a very small period of time, just like you can lose a lesser amount of money in a very small period of time if you are not careful and perhaps not knowing what you're doing fully. But I will say this, you do have to learn how to be in the market, in my opinion, and simulation is virtually worthless. There's no good simulation of what you're going to have to live through when you're in a market. You can't simulate it, right? It has to be real. You can practice talking to the girl that's pretty, that's standing over there. You can practice talking to her all you want, but when that's very different. That's simulation than actually walking up and speaking with her. So I would not waste a minute of your time in a simulator that simulates what the market's going to do, and then you try to figure out what you're going to do, or anything like that. Because in reality, the skill set of making good decisions while you're in the market is too important and can't be simulated. So I can't 100% discount simulation, because if a person wanted to, he could, they have it on platforms now where you can just rewind the market and have it show up, kind of like going forward like this, and you try to, put your work together and see if you could forecast what the market was going to do and so on. I suppose that has maybe a little bit of value, but so much of what you and I have to do in the markets has to do with being in them and making good decisions when we're in them. And that is not a small, lightly, achieved skill. You really have to have the courage of your convictions. And that's what it is. You get courage from having done the homework. And then when the market starts to show its hand, you end up saying, okay, this is time for me to get in. I mentioned yesterday, and I just want to comment on this, that there are positions where I'll just say, and I know this is about half the middle, but I don't do this, but I might just say, let's just get in, and then maybe subsequently the market goes higher. There's other ways to get in, which are more like pullbacks, where you'd be getting in when the market pulls back for an expected continuation advance. I actually prefer this over this, but I still sometimes do this if I have to, and I know the move is on, and I know there's quite a bit of movement left in the market to get to a specific price. So this is just stating that in actually trading markets, I do like the idea, because particularly the S&P, it likes to retrace ground that it's gone over, even on the way up to substantially higher prices. And those retracements do give real opportunities to be in for the continued advance. And if you can get it right, you can get in at a point where the market spends very little time retesting you and actually is spending most of its time moving away from your position. We have also, I just want to comment that we have, I think on the 15th, on Wednesday coming up, the same day that they have the Fed interest rate announcement, we do have a Square Principle webinar coming up with a new date for a seminar that is coming up. And if you'd like to come to that, we're sending out emails about that, or you can call in and have them send it to you directly if you'd like to come and check out the thought and the idea of maybe attending the seminar for you to learn the Square Principle and be able to understand things like why the market might want to touch 33 and 23 in today's third or fourth hour, and be able to put things together that decode the condition of the market and not continue trying to get all that information out of something that doesn't contain it, which is a single price bar. So that would be useful, I think, for you to consider. So anyway, there's so much with these markets, and they are really so much fun to work with and to make. It's like a puzzle that has to be solved, and if you can solve it, there is a payment for having solved it. You win a prize, if you want to think that way, for having correctly solved the puzzle and also correctly traded that solving of the puzzle. And that, if I think about money, I think of it more of that way, that there's a reward for having solved it correctly, rather than just running around saying, I want to make my 2 points for the day, which are words that, I just don't have enough, stomach to even say very often, because it makes me nauseous. It's like being around, having been around, and you've done this in your life, I'm sure you'd be around people who speak a certain way and have certain ways that they think. And at some point, it really makes you sick to your stomach, right? You've seen that, where you just the ideas themselves are nauseating, that some people would have or promote or whatever. And so I had to run from that at some point. I was like everybody else, and you come in, you don't know what's going on, and you're just learning. But you do find out at some point, just like you do pretty much in any endeavor, that there are levels of people and their understanding. And when you're new to something, you almost always end up getting the worst of the bunch, right? Those people who know the least telling you what to do and so on. And since you don't know anything, you end up kind of maybe following what they're doing. And then it takes a long time to unwind that bad information. once you have unwound that bad information, then you're left to your own resources. It's almost like a person stuck out in the ocean and he's trying to follow someone's instructions on how to get the boat to operate when the motor won't start, but they gave you really lousy information. And you figure out, you know what, that person's not here, but I know the information they gave me was just wrong. Now, suddenly, you don't have anybody to turn to, and you have to start thinking for yourself about what the problem could be. So I've said before that intelligence is the ability to make connections. And I could take that one step further by saying intelligence is the ability to use those connections to solve a problem. I mean, one real test of intelligence is problem solving. So the markets are kind of like a problem that you need to solve, and you put together certain ideas, like in our case, the square principle, reflected wave, and so on, to try to solve the problem. And if we can't solve the problem, we just don't worry about it. We won't take that trade. We won't be in that move. But if we can, or to our own satisfaction, we solve the problem, then we're very interested in being in the market for that move. So, if there was a game where people, got a prize for calling the market correctly or for something like that, maybe people would think differently. But the the markets really do tend to bring out the worst in people regarding a lot of these ideas and things that I sometimes talk about that I think are wrong, and they're sort of destructive ideas. And then at some point you're left on your own when you realize that, and you start to come up with your own, what is not nauseating to you, hopefully better ideas than what people told you. It's funny, you're born into this world and everybody's there to tell you how it all is, aren't they? I mean, hopefully you have some good parents. Hopefully when you come into a family, you've got people that have some sanity and they raise you in a happy environment and so on. But we really are coming in as not a blank slate, but, just surface mentality. We don't have much going on, and people are telling us how everything is. And that's how it is all the time. One of the things in my earlier life, when I would be with somebody going somewhere or doing something, and some issue came up that had to be resolved, like, hey, we don't know where this address is, or something that came up, I would never get a chance. Somebody would always be there to blurt out what their solution was, and it would interrupt what you're thinking because you're trying to figure it out. And this has been a thing in my life where there's always somebody standing around that's going to say something if there's a problem there, and he's going to give you, in many cases, the worst solution to the problem and throw you off and so on. At some point, you have to understand, and I want to say this in the most positive light I possibly can, there is unique stamped intelligence in each person, and that includes each person listening. And you should give yourself the opportunity to see what it is that you think and how you think, and not just take everybody else's instructions and words for what to do. You can certainly get an idea from somebody and then go put it to work and see if it works for you in some way. But to really start to think a little bit on your own, because you are unique. They didn't make two of you. You might notice that. Sometimes they do, then they're called twins. But my point is that you have a unique way of looking at things that if you're constantly listening to other people, including me for that matter, you might not ever get to the inner core of you and what your intelligence says is going to happen. I told you the story from Vernon Howard, my lifelong teacher. He's not alive, but he's still my lifelong teacher because his teachings are still operative and living in me. The story of the king that needed the new castle. and the minister brings in all these builders, and they all come in, and the minister asks the next guy up, and he says, yeah, I would build the castle this way, and I would do this, and I'd build the moat that way. And then the second guy comes up, and he shows his plans for the castle. And finally, the last guy's there on the last day, and the minister says, I see you're here, but I see you didn't bring anything with you. You didn't bring any papers or anything. And the man said, yes, that's correct. I don't have any paperwork with me. What kind of castle would the king like? That was his question. Everyone else was telling the king how they were going to build the castle, right? And the last man, who was going to be the best builder, he said, I don't have any plans. I want to know what the king wants. What does he want? How does he want the castle to be, right? So that's what I think of when I think of this subject, about, how do you think? Forget about how everybody else thinks. Go investigate a little bit of your own intelligence, which is innate and literally God-given. It's not bad intelligence. It's good intelligence. And see what you come up with, and spend a little time on it from time to time, rather than taking what everybody else says, because you do have unique intelligence. And I'm saying this from my own experience, because I was told so much complete nonsense. And, the truth, the false travels around the world 15 times, 1,000 times, and truth gets across the street. Barely, right? There's something peculiar about the false that makes people grab onto it. And there's something very limiting about the truth that makes it not easy for people to see and understand. It's kind of like truth is the best illusion, but when you get through the illusion, it's the real thing. The false looks like the real thing, and it's an illusion too, but when you get through it, you find out that it really is an illusion. The one thing about the quote unquote illusion of truth is that when you get through the illusion part of it, you really have the truth. And if truth was really so attractive, you'd see many, many more people, having it. But in general terms, we're all taught things that are wrong. You have to use your own intelligence to figure stuff out. And I really do think that, because I'm not a mathematician, this was not my, I don't want to say it wasn't my destiny, but, markets had no interest for me and so on. And yet I applied only what was in me to get to wherever I am on Trader's Mountain. And I know that this can be true for everyone else. I do want to be of help to people. I do want to give them what I have found, but I still want you to use your own intelligence anyway in using it. I'm never going to tell you this is the best or the only way to do things and so on. I can only tell you what I have found has been good and useful to me. And then I still would want you to use your own intelligence in using it, and not rely on anybody, because that will bring up your own intelligence to have to go to work. So let's see what's on your mind today. Sorry, every day you're going to get a little something from me. So Rhonda's here. She says, David, I noticed you scheduled a live demo of the Square Principle next Wednesday, 3/16, the afternoon of the Fed interest rate announcement. Did you schedule that day on purpose? No, thank you, Rhonda. We didn't schedule that day on purpose that way. I originally thought the Fed announcement was, I know it's a 2-day announcement, the 15th, I think, and the 16th. So it's possible that that's just going to be unfortunate, because, the last half of the half hour is what we're going to be missing of that day. So it is a little unfortunate, but it'll start at 12:30 on that day, on the 16th. So yeah, it is that is a little unfortunate, but we did schedule it. It's the way it is. So thank you, Rhonda. John is here, and he says the Japanese got it right. Candlesticks are the way to go. They did get it right. And I do think candlesticks are the best way to look at the markets. Just don't believe that any one candle speaks for the entire market. Stu is here, and he says, hi, David, any completion on June 28th? Yesterday, you indicated closers then 154.12 was buying territory. I'm not sure what market you're referring to there, Stu. On bonds. We do like the bond market right now, because we have a daily reflected wave bottom. And so we kind of, we do have a little something going on in the bond market. So there is a bottom that is being put in. We think it's pretty important. Yeah, the 15th, thank you, Joseph, is Tuesday, and the 16th is Wednesday. I appreciate that. Stu he also says on 3.8 you said gold's annual top is 2023, but on 3.9 you said it would be 2022. Yesterday you indicated that you would look into the correct bar. Do you have that information? Let me double check that right now, if you don't mind. I will have to turn the screens off for a minute, if you don't mind. I can still talk to you, of course, but I do remember looking at that, and I do remember not remembering exactly. So let's take a look. Let's see if I can give you the gold stuff also, if I may say so. There's some semi-annual stuff in gold as well. So the on time, okay, so it is not an annual top. I know that for sure. I must have been thinking about another market. It's not an annual top. Oh, I'm sorry. Hold on. That's the S&P. So sorry. Hold on. Let's go back to the yearly top. So yeah, in our work, this is exactly what it was. The on-time top for gold, the on-time year was 2021. And at that time, gold had made a high in the 1 year early, which was 2020. So remember, this is yearly, so it's a really big time frame. And then this year, the 1 year late, we've made a slightly new high in gold. The old high was something like 2063, and the new high is 2078. So yeah, that is where we are. So we're in the 1 year late for a yearly top in gold. And this would indicate to us then certain things in reflected wave would have to happen on the downside. The price would have to come down to a particular reflected wave bottom that it would trigger. And this is one of the beautiful things about reflected wave, is it tells you the exact time frame that reflected wave is going to have to trigger a bottom on to satisfy the initial downside target from a yearly or any other time frame top. And therefore it gives you a very specific thing to hold short positions for. Now, the markets we're not actually taking short positions in gold right now because of the volatility and because of the possibility of maybe a yearly reflected wave breakout, which would be a huge thing. But once we have a little more comfort with the idea that the top is really in, then we're going to be using the reflected wave principle to tell us how long to hold that position for. So that's I hope that answers that question. So the year we're on the 1 bar late right now on the yearly chart, Stu. So thank you. You should be able to see the screen now, Samuel. I just had it off just for a couple of minutes there. Let's see if there's anything else. Let's take a quick look. We also had a little something in May soybeans, that soybeans was going to go sideways, basically into, at the latest, into the 15th, where it would be trading at right around where they are, 1674, 1675. This is kind of a center for the market up here. And at the very least, into tomorrow's session, we'll be trading at that price, if not on, except Monday's session, if not on Tuesday as well. And then there might be something else that we'd be looking to have happen in soybeans. So this happens to be the soybean market right here. So yeah, a lot of interesting things are happening in markets right now. And I can assure you that next week is going to be very, very volatile, particularly with the announcement, any other stuff with Ukraine. I mean, it's going to be wild. So you have to almost literally have a seatbelt on in order to trade in these markets. And if it's too much, then you don't take a trade. But generally speaking, once the market confirms that a move is on in super high volatility, the downside is that, yes, it's going to go against you a little bit on the way down to much, much lower or much, much higher, whichever you're trading side on. It's going to go much, much further than your normal trade. And can you deal with that success? I used to joke with Michael Z that used to come to my office when he was trading, because I don't think maybe, I don't know what he's doing now, but I don't think he's trading now. But I used to say when he was long, let's say he was long something, and the market, he was really tempted to get out because he kind of was a snipping, kind of getting in and getting out really fast. And I would say to him, Michael, just hold it like it was a loser. It's kind of a joke, but don't we all agree? Most of us are much more comfortable holding losing positions. We'll let a loss go a lot further than it really should. Somehow we're comfortable with that. So I was saying to him, hold your winning position as if it was a loser so that you get the benefit of the whole run rather than just getting out after a very small amount and then snipping in and out a zillion times a day. But my point is that I suppose that it does take practice to be in a volatile market and stay for these often really ridiculous distant targets that the indications will give you. It's hard to believe, like this morning when they're up in the 80s, actually going to be 50 points lower by the third hour. But you do get, in practicing this with real markets, you do get it burned into your head that everything is really possible if it's indicated and if the market really indicates that something's going to happen. So that's the thing. Can you get to a point where you can really say this is what's likely going to happen? That's what you're trying to do. And if you can't, come to our Square Principle webinar next week on Wednesday, and we'll put together some ideas and let you start to think more about the possibility of coming to be able to understand how we do it. And then I would want you to learn how we do it, but also use your own mind in figuring out other ways to use that principle, because you have unique intelligence. Even if you don't feel like you do have it. I found out for myself I did. I was barely a high school graduate, right? But there are things in all of us that are deeper down that can allow you to do something. Listen, there's very, very smart people, like top IQ people in the world, that indeed they may be one of the smartest people in the world in terms of IQ, but maybe they really haven't done much with their life. And then there's another person over here who, he doesn't have that super IQ, but yet he's excelled really far in some other endeavor or a big business, or he's made a huge name for himself in some way. So the kind of intelligence that is measured, the kind that most of us are not going to have a 160 IQ on, that's not the only kind of intelligence that there is. There's many levels of different kinds of intelligence, all the way to the point of physical intelligence. Your body, does it not have super physical intelligence in it? Of course it does. Look at your dog and how, especially if you have a somewhat bigger dog, how deftly they can jump and turn and do all these things. They have an enormous amount of physical intelligence, and so do athletes, and so do people just in general. So don't be dismayed by the fact that you may not have the normal measurement for intelligence. That's just one of many. The person who could maybe go very, very far in some field with a really normal IQ does that because he has intelligence at a different level that allows him to do that. So don't underestimate, if I can say this the clearest I can, don't underestimate all of the God-given things, including intelligence and other factors, emotional intelligence of all kinds, that you're walking around with. And all that it requires is you just begin to pay attention to your own intelligence and stop letting everybody else tell you how it is. Because from the day that you were born till the day that you die, there's going to be a group of people around you always telling you how it is. And at some point, some gap in all of that, you have to clear a little clearing to take some time to see what you think. How do you want the castle built, right? That's what you have to do partly with this life, because you were given so much. You may not feel like you were, but you were. It's all in there, and it's at different levels, and you have to be more interested in those levels than listening to what everybody has to tell you how everything is. All right, let me see if there's any other questions here. Can't see the screen. You should be able to see the screen now. Thank you. Timothy's here. Hi, Timothy says the important 4269 level you have mentioned has been both support and resistance for several days in the RTH and Globex and small time frames. Interesting. Is today's close above it still important? Yes, it is. And it's actually 63 in the new contract. So we are, of course, in the June contract now. And it's not the most important number. And I know you know what is derived from, Tim. It's not the most important, but it's important enough that we're keeping track of it in case we have something larger that's indicated on the upside, and then suddenly they're back above 29.63 on a daily close or something. That could be very important to help us, confirm that something is going to happen. So there's the idea that something's going to happen. There's the premise, and then there's confirmations that continue to occur along the way until the thing actually happens. So the things, you start with the theoretical and it slowly works its way around to the actual. So between the theoretical and the actual is where we all trade. That's where we get in and out of markets. So there you are. It's not difficult to have a premise, but it can take some work to know if your premise is likely to be correct. That will take some work, just so that you know from yourself that you really do have some real probability of something being correct. The markets are moving all the time, and in all that movement, some of those movements are less important, some of them are more important. So one thing I would suggest that you think about in the market is don't get confused by all of the movement, like 5 minute and 1 minute and so on. And that's where a lot of people trade, but it can leave you bleary-eyed because a lot of very unimportant, so to speak, movement occurs on those time frames. And if you could keep yourself understanding a little more broadly about what the market's doing on other time frames, it would be a lot easier for you to get what it is you're trying to do, which is to come up with a premise for what the market's likely going to do. It all gets sort of washed away, though, if you're watching really tiny time frames, and those time frames are really a part of the whole market, but they may not allow you to see clearly anything that is likely going to occur. So I really suggest that you don't get too wrapped up in the small time frames. And maybe you saw somebody early on in your career that told you, oh, this is what you do. You trade on 5 minute or you trade on 1 minute. And again, there's always somebody there telling you how it is. And that's it again. All I'm telling you is, listen, if you come to our seminar, I'm going to tell you how it is and how we do what we do. But at least we can prove that it works. I mean, at least we can show you that there's real validity to it. And then I still encourage you to use your own thoughtful expression. Timothy, who just did a question, he has done that. He has taken a lot of time with the square principle and experimented around and worked out different things that make sense to him. That's the kind of thing that I would want all of you to do. All right, so listen, I do have to get back to it here, and I do so much appreciate you coming out today to listen. I don't know. Well, let's see. We'll be back on Monday. We will probably be able to have a meeting on Monday, but we'll see. Let's see. Is Monday still an inflection point for oil and gold? It's an important date for sure, plus or minus a day, but I can't go into greater detail than that right now, Samuel, so I apologize for that. So we'll leave it at that for the time being. Thanks for listening to me, and I'll plan on seeing you here on Monday, same time, for our Market Thoughts program. Stay well. I'll see you then.